Hi folks, it's Aidan CryptoBurb speaking. Welcome to today's Friday webinar. Bitcoin is pushing. It has rallied over 30% in just a matter of a couple of days over the last week. Significant push, which took us as far as $27,000 as a touch point earlier today. Incredible day with a triple witching day, actually closing contracts for the futures and lots of volatility, right? Let's see what the market is cooking for us in the next days. Let's stay tuned because what's coming may be really big. Welcome, everybody. Please tell me again how you guys are doing in the chat. My name is Adrian, and I host this literally every single Friday. Every Friday, well, with a couple of different exceptions when I'm on board when I fly. I've just arrived from Dubai, basically from pretty cool conference, lots of very beautiful people that I met. And at the same time, I often make this fun and joke that whenever I fly, whenever I board the plane, Bitcoin pumps. It has a pretty good strike rate, funnily enough. Of course, there is no like a, you know, uh, no causality, if you will, right? Uh, However, it's still a funny thing. So while recovering my voice, it may happen that you may hear a little bit of some coughs. So sorry about that in advance. However, I do want to know how you guys are doing. Please let me know in the comments where you're coming from. How's the temperature? What's the temperature in your place? And what's the temperature of your mindset? Right? If you guys are ready to see some bigger numbers for Bitcoin, right? Because that's exactly what we've been, I think, preparing, over the past couple of weeks, and me being very vocal about loading the Bitcoin at $20,000, with dealing with lots of haters, dealing with lots of cognitive dissonance for many people who got stuck in the bear market thinking, I did wanted to learn, and I did my best to kind of like translate a couple of bullish reasons, right, for why Bitcoin was really going for it. And there were many of those, right? I recorded many videos, such as this one, when before you give up on Bitcoin after the red day, which was basically the very bottom of the market, right, of the market correction. It was right at the moving average. Excuse me, right at the moving average of $20,000, right? So lots of those videos were really given so that when in doubt, zoom out, right? Not losing this long-term picture on the side. We did manage to give away a couple of hundreds of dollars in the giveaways, as well as the hoodies, which we have just launched with our incredible trading bundle, which is live. And I'm going to do my best to later highlight the most important points for you, which may matter. 5 reasons why Bitcoin is not in the bear market anymore. It's now more important than ever. Selling Bitcoin might be a big mistake, which actually the timing for that was at this specific time, right? So we're talking about the perfect timing, the very bottom uh, calls. And yet there was a lot of hate that I got on my shoulders for that, right? So it often happens, right? Because typically when it conflicts the views for different traders, for what I say, for what I do, or for what you say to them, what you will do. You will often face hate. You will often face the biggest amount of hatred, the biggest amount of jokes, the biggest amount of laughs when the people laugh at you. And when the market turns, right? And only in advance, only after the time passes, only in hindsight, they will admit to right. However, it's not important. Being right or wrong is completely irrelevant from the market trading point of view, right? You can be wrong, you can make money, you can be right and lose money. However, what matters is the trading profitability, right? So that's exactly what I've been doing transparently. I've been working with the $50,000 entry on the long-term average, which is what I added to, right? We've seen this nice uptick on the 200-day moving average, which has started moving up again. Positive sign because it tells me that the primary trend, primary movement is curving up. It's a positive thing. On top of that, of course, there were lots of different reasons, such as, like I said, this thread selling, like I said, giving you basically 20 different reasons why you should not much give up on Bitcoin. Another thread, basically why we should not give up on Bitcoin in 2023 as it's preparing for huge rallies, right? So there are tons of these content pieces, including this explanation why I bought $15,000 worth of Bitcoin at $20,000, right? Right now it's closer to 900 or something. So long story short, it's been pretty good couple of months. Uh, Portfolio is up probably closer to like $400,000 since the year started, so it's pretty cool. However, uh, you cannot much maybe see excitement, on my face, right? I mean, I'm excited because I talk to you. However, money doesn't make me really excited anymore. Like I can lose 100K on a day, and I'm not going to just stop smiling, and I can win 100K on the other side, of win 100 400,000, and it's still money, right? So eventually trading is just this vehicle, is just this tool to kind of like print money on the legal basis, and not really camaraderie, with the feds, right? Because of course, you cannot print money, right? The only people who can print money is the people in the suits, right? In the government. And when they print money, it's everything. Everything is okay, right? You try to print money, they put your ass in jail forever. So it's a little bit of a joke. The entire financial system is literally at the verge of a collapse. We're talking about huge banks just basically getting ridiculously smashed and crashed. The entire financial system is basically, just hanging off a cliff, right? Hanging off a cliff. The situation is 10 times worse than it was in 2018. The credit default swaps for for the banks, as in the insurance against the banks collapse, went through the roof, with the Lehman Brothers, basically being ridiculously high. At that time, it's nothing compared to what we looked at on the last couple of days, when the Credit Suisse basically nuked like 30-50% or so, before they halted trading. So lots of those messing around, from the politicians, from those corrupted institutions, from the money printers, and so on and so forth, often add this bullishness as the narrative for Bitcoin, right? This gives a reason for people to disbelieve the politicians and actually move to something that is a little bit of more self-custody, right? In terms of the cryptocurrencies. So if I were to argue anything, it's just gained a little bit of an uptick, in terms of the fundamental reasoning. Shit, excuse me. Fundamental reasoning, for why the market is a cryptocurrency, is maybe just inclining this year, right? So, long story short, right? Let's get a deep dive into the markets, right? I always start off and kick off with the intermarket technical analysis, following the great master works of the John Murphy, the one and only, who's called often the father, the godfather of technical analysis, right? Who did really great job summarizing and bringing new concept, new light to the different concepts for technical analysis studies, right? As we grow and mature as the technical analysis fans, if you will, right? So let's get a little bit of a deep dive. I hope there's pretty nice engagement in the comments. So before I really deep dive, best love to Netherlands. I love Dutch people. You guys, I don't know how you guys are doing. You are always awesome. That's pretty cool. John Cross, what a cool surname. John is saying US here. Lorenzo is saying hi. Belgium from Sniper. Greetings from Paraguay. There we go. Love Paraguay. I've never been there. Anything just ever heard was really cool. So I definitely love to visit there one time. Constantly saying hi back. Lorenzo Salmon is just popping on an overstretched price action. If that's what you call a trend is overstretched price action. You're right about that. It's an overstretched price action. However, those trends tend to persist. Kia ora from Taranaki, New Zealand. Wow, that is something cool, John. I've never heard of this place. Of course, I've heard of New Zealand. I loved it's definitely in my places to visit one time. Raining here at the moment. Take care. Thank you for that. Hi from Denmark. Siema, Łatka, pozdro z Warszawy. Ponzi it is. Piush was very right about summarizing, the corrupted politicians. That's what it is. Consti Bird in Germany, of course. Love you, man. Back. This is pretty cool. Yeah, listen. I mean, I really appreciate every time you join in the shows. I would basically congratulate you, and this is what I'm doing as well, because you guys are ahead of the curve. You're really watching that and trying to learn when the world is collapsing, when people are really uncertain about the future. So your being here, your presence here, tells me a lot, right? Because it tells me that you are at the early stage of the bull market, and there are so many reasons for why it is like that, right? And many of those I did bring, like I said, transparently on Twitter. So feel free to go and look it up at any time, watching like, Jesus, I posted like 20 different tweets for for why you could actually go for it, and turn into the bull market ideas. And just not to waste much of your time, feel free to scroll it over, up and down, and you're going to find it. Let's get a brief outlook for what is going on in the market. Of course, the entire financial system um, scattering and shattering, and crumbling and crashing is not necessarily good in the short side, in the short end of the on the timeline, right? So the markets have reacted, the risk assets, except for Bitcoin, have reacted a little bit negatively, right? The breakdown, the transportation average on the bottom, also broke down in line with what the industrials did. The industrial average, the Dow Jones Industrials have basically broken a little bit to the downside below the 200-day average, which is again just a little bit of noise, right? I made a couple of different videos explaining why we should not necessarily care about those or overweight, outweigh those short-term fluctuations when the market just kind of like goes up and down, which is typically more chaotic, more random, and not necessarily having much to do with technical analysis, more so like different um, independent situations, right? So for instance, the recent situation with the banks, this added a lot of fundamental reason why there should be a stop in the tapering. There should be stop basically in the rate hikes, right? Immediate turn. Otherwise, I mean, the money has been printed already just to aid and ensure that the financial system as it is, based on the banks, does not collapse, right? So we did have this money injection already, which means monetary easing, right? Buying back bonds. So the bond prices went through the roof. Uh, the yields were ridiculous. I mean, the volatility unseen and the declines unseen since 1987 crashed. That was something spectacular, from 5% and on the shorter yields to 4% or even below 4%, 3.38, 3.7. That's ridiculous. Okay, so a very significant fundamental turn that might have just appeared in the cards, which adds again a lot of reason for why the market is supposed to head upwards and north in the 2023, right? However, short-term uncertainty often induces a lot of fear, right? And this fear makes us act irrationally and makes us basically fall for this recency bias and representativeness bias. Just look at the very recent movement, the recent dump, and fall for the saliency, believing that the market is going to continue like that. However, the reality is that after it's already declined, most of the people would expect it to go even further, right? Because it's declined so much, so it has to really go even lower. However, if it's declined so much, then maybe there is a question, and eventually, it's reached some sort of like support level, and maybe it's just about to turn up, right? You never know, of course, right? This is always obvious. Excuse me, always obvious in the hindsight. Uh, yeah, so if we go and see, go and have a look, at the overall ness, overall situation of the financial markets, there is a lot of uncertainty, right? Let's just see, right? Dow Jones Industrials, boom, in the red today, right? The Nasdaq Composite is in the day. Funnily enough, the seasonal pattern, I mean, I'm not going to repeat myself too much in here about that. However, the seasonality is very positive for 2023, making it a pre-election year, and knowing that basically over the last 84 years, only one time the pre-election year was losing, right? So the odds are 83 to 84 that if you bet on strong positive growth in 2023, that you win money. And we're talking about big money because we talk about 20% on average increase for the S&P 500 for the yearly performance, for the year start to the year end, and 30% on average for the Nasdaq, right? So it's I would say it's pretty strong year. It's pretty strong year on the calendar, right? So those little bit of fluctuations on the local side, right? Lots of red markets. See how it looks, right? All the stocks are in the red today. All those stocks, right? We're talking about consumer discretion, or we're talking about even the staples. So both risk offensive and risk defensive stocks, the stocks groups. Sectors are basically down, right? Which means that there has been an overall safe flight to safety outside of. Excuse me, please bear with me. Keep your fingers crossed. Send prayers so that I recover fast, so that I stop basically doing that. So there's been flight to safety, I would argue, right? This is not something that is extremely bullish in the short term. However, like I said, we should not lose sight of the things that really matter, right? So while carrying and encountering, incorporating, encountering basically those short-term movements represented in the form of candlesticks or bar charts, you should definitely never forget about the directions of the moving average, right? 200-day moving average represents the long-term trend, which basically is a primary tide, the primary movement, the main dominant tendency narrative for the year. And arguably, it stopped moving down, right, for the S&P 500, which was lagging a lot, right? Needless to say that it stopped moving down also for the industrials, right, for the Dow Jones Industrials. So the markets have shifted away from the 2022 bearish narrative, right? This is also seen in the performance, right? If we go and have a look at the performance on the relative side, or even on the side of ever since the year started, let's say 52 days, right? Then what we're looking at, there's been this significant push um, over the past couple of days, over the past couple of weeks, right? Ever since the year started, we are talking about significant push. Then February kind of like coming into bearish phase until the March started, right? A little bit of fluctuations and following through higher. Eventually, in the local breakouts in the risk offensive stocks, right? We're talking about the green one, which is communication services, very, very cyclical stock, risk offensive, technology, and consumer discretionary. So those markets, are gaining in terms of the percentage. Over the past couple of weeks, ever since the year started, right? So we're talking about 16% year-to-date performance on the risk-aggressive stocks, and at the same time, the stocks that really did well in 2022, those bearish market stocks, that should now basically decline in the bull market, are declining. So it tells me that this is a bull market setup, and see that this disproportion, this dissonance, this deviation between one and another, the clump of the underperformance, right, is increasing, right? You can tell that this has been basically increasing, right? This deviation, this difference spread between the overperformance and underperformers is basically increasing. This tells me that at least in the short term side, in the short term time frame, the markets have been ramping up, towards the risk assets in a way against the defensive stocks. Energy, excuse me, energy broke down the double top pattern. The double top, which is a bearish kind of like a peak formation, broke down, and it broke down extremely in a very confident manner, in a very, I should say, technical, beautiful manner. This is a textbook example of a breakdown, right? We've seen this override, on top, this overthrow twice. We've seen this perfect candidate for the top. Basically, the only thing that it had to do was to confirm the breakdown with the neckline, right? Confirming the breakdown with the neckline, and at the same time, this neckline aligned ideally with the 200-day moving average. So this tells me that it's falling off and below the 200-day moving average, below the trend, the bull market trend, speaking and suggesting that it's a long-term reversal. Okay, and of course, the deeper it goes, the deeper it kind of like invades and penetrates this previous range, of the prices, the floors, of what was it, that June, July, Q3 of 2022, of the bear market. Then the bigger the chances that it's just going to continue to follow through, right? Because we are talking about the long-term reversal, and it's been nothing but going up for the past 2 years or so, right? So it may well be just the end of the bull market for the energy stocks, and it does align, of course, with the fundamental twist, like I said. Excuse me, please. With the fundamental twist on the quantitative easing and printing money just to secure the banks against the collapse, right? So, long story short, I would say that this brings a lot of bullish reasons for the energy to collapse, right? Energy collapse is bullish, contrary to popular opinion, right? This chart is bullish. I would say that this chart is bullish, not technically because like for the XLE itself, for the energy sector of the S&P 500. However, it is bullish for everything else, for the cyclical stocks, for the risk stocks, because lower energy prices, cheaper energy prices means easier economic conditions for the businesses, right? And at the same time, better situation for the miners, right? Because they have to pay less. Lower costs, more money, more disposable income stays in your pocket, and you can do whatever you want about that, right? And some people are going to inject it into financial markets, and even more people right now seeing the crumbling on a financial system in the banking sector, which is basically being decapitated, uh, may favor Bitcoin over that and freedom. Let's see, right? Please tell me if it makes sense so far. Yeah, I appreciate all the kind comments, and go on stage right, smash the like button, so guys everywhere. Thank you so much. By the way, if you're watching that on YouTube, make sure you get subscribed to our channel. This is free show. You don't pay for that, right? And if you appreciate all the knowledge and watched all the streams, all the videos, you've basically made a bank already. So if you do appreciate it, make sure you hit the subscribe button, smash the notification bell as well, so that you stay notified every time we put out every new video. And there are plenty of those, especially in 2023 now when the market is ramping up. So do it, do it, do it. Drop some comments and questions if you have any. I'll do my best to cover them along with my team, as long as my voice just doesn't fail for now. So I appreciate your patience, legends. Speaking of relative strength studies, right? I mean, the one point that I actually didn't give was the relative strength confirmation, right? This is a relative strength curve for the energy sector, and this breakdown is credible for many reasons. The price traveled percentage breaking below the critical moving average, double top formation, so a chart pattern completion, lots of reasons. Fundamental twist, like I said, exogenous situation that happened out there, and it's additionally backed by the breakdown on the relative strength side against the S&P 500, which tells me that it's relatively going down when the versus the S&P 500. It's telling me that it's underperforming locally, and it's good. We really want to see energy underperform, right? Otherwise, the bull market is not going to kick off for good. Similar important studies are for the risk on risk off environment, right? Which is the as simple as dividing the security price for XLY, consumer discretionary, which is considered the main cyclical stock, telling and expressing how people feel about their spending, about their discretion, which is something that is not of a staple necessity of goods, beverages, of food, something upon their discretion, some durable goods, cars, Tesla, and so on and so forth, right? When you decide to make this leap of faith and then buy a car, this means that you're really looking positively into the future, right? Expecting that the things are well and good, that you can afford to have this car, right? That you can afford to have those durable goods and the home appliances and so on and so forth, right? So there are so many reasons for why comparing the XLY to the XLP, which is the opposite, which is the consumer staples, like I said, the very basic goods necessities that only you can do when the market is not really doing well, when you don't really have much money, the basic goods. So observing the correlation of, I should say, observing the connection, the relationship, the performance, leaders and laggards, tells you a lot about the market sentiment, and tells you a lot about the market's preference. And it tells me that over the course of the last months, ever since 2023 started, there's been a significant sharp reversal over critical levels seen in the map, right? So I would not so much perhaps pay attention to like very specific levels here, right? Remember, that's not a directly tradable asset. It's more about observing the trends. So which is when you close, when you imagine that all this bar chart kind of like noise disappears, and all that you focus on is this blue curve representing the 200-day relative trend of the XLY versus the XLP, which is risk on risk off. It tells me that, again, we are shifting away from the bear market tendency. We have basically stopped going down. This blue curve has stopped going down, right? It started going basically flat. So again, it is a positive matter because it tells me that with this positive breakout that we had earlier this year, into January, before we started correcting into February and a little bit of March, this brings a lot of bullish optimism. I should say eventually we've got this solid positive breakout to the upside with a local correction. It's fine if it's, like I said, it's declined a little bit below the average, below the trend. It's natural that the prices and the bar charts and the candlesticks are going to basically deviate against long-term values. It's natural, right? However, those tertiary fluctuations are not necessarily relevant for the long-term view, right? Which is exactly what happened with Bitcoin, dropping to $20,000 right before it headed off to to 26K, right? The inverted yield curve situation has slightly improved. I mean, the depth, I should say, of the yield curve inversion, has decreased, right? The 2-year and the 10-year spread, has decreased from minus 1.7 to minus 0.58. This is a reason, of the monetary kind of like a rotation in terms of the monetary policy, right? The angles have changed, and they have changed more towards the positive impact, to positive influx, for the financial markets, right? It does historically, however, bring recession. Right now, of course, arguably bringing money tightening, stop to the money interest rate hiking, and bringing back, on the table the print money printer, basically was the inflation. So we are talking about still high inflation, potential jump into inflation, and the Fed not really being able to overreact to it, because it tells you that if the banks have already started crumbling, and started getting decapitated, they have already overridden the expectations. They have already overridden and overshot and over tightened, right? So there needs to be this rapid collapse, which is going to work in favor of the stock market, in favor of the financial assets and the financial cycle. However, it may push us well into recession right before we head off for the good things, right? And of course, historically speaking, every time there was a there was a recession, this recession was preceded by the inverted yield curve, right? The yield curve inversion is not a good thing. It's showing a lot of disbalance between the Fed's monetary policy, monetary policy working on the short side of the curve, of the yield curve, and at the same time the disparity, this spread between what traders and investors are expecting, right? Hope it makes sense. So, long story short, if we are here, Bitcoin has got to be recognized among other markets. Like I said, the markets do not trade in vacuum. Bitcoin is one of the financial assets, is one of the financial market representatives, for the cryptocurrencies, right? It's a barometer. It's an indicator of the risk appetite, right? So what institutions are doing and what they are feeling and what big money is feeling about the market. If they feel bullish about the market, and they would buy Bitcoin. If they feel bullish and risky, that the risk offensive kind of like strategies are there to be taken for this year, they would buy Bitcoin, and Bitcoin prices would go up in terms of increased, caused by increased demand. Hope it makes sense, right? And vice versa. So having this bullish signal on the bullish moving average crossover, 50-day and 200-day moving averages, it's an infrequent, scarce, and rare occasion and situation in a long-term chart, right? And you get to see only once, get to see once in a while, once in a year. The last sell signal that came up was in 2022 at the start, right? The last buy signal, except for this one that is just coming out in February or so, was as early as mid 2021, right? So that's a lot of time. That's a long period of time, if you ask me, right? So I would say that having this with a perfect setup, like I said, strong persistent movement on the 50-day average, which represent the medium-term trend, telling me that the prices are trending higher on the medium term, very, very constructively, in a very, very decisive manner. Just a straight slope, straight line, straight angle, right? Just a little bit of a tiny stop, kind of like a pause pit stop, and it's already started inclining into new highs. Breaking above the new highs, 26 to almost $27,000, like I said, bouncing perfectly off the 200-day moving average. This is a good candidate for further growth. This is a very strong, good candidate for very bullish odds for April and May. Right, that's something that I wanted to tell you about. So speaking of the seasonality, like I said, 84 years of data, only one losing year in the pre-elections. Not a single politician would be dumb enough, arguably, to ruin the economy and ruin the markets right heading into the elections, right? Nobody would pick them if the situation is bad and they had led to it. They had caused this bad situation. Then who on earth would ever pick them up for the re-election? Come on. It's just pure simple, common sense. So naturally they're going to do everything not to crush the economy, not to crush the market. So which means bringing back the money printers, right? That's the only way to fix the broken financial system. They're going to cure it with exactly what broke the system, right? Tell me about the logical sense to it. They're going to inflate this balloon even more, right? And eventually it's going to burst at one point. That is hard to maintain. However, what matters, the March history has not been a good month on average. It doesn't mean it's going to be, bad forever. It means that it's a losing month on average, right? It also means that over the last 9 years or so, right? This is, let's say, what was it? The first March through 1st of April or the 2nd of April, whatever, doesn't matter much. 54% annualized return. This is a compound kind of like return. It's not good. The median return -3%, average return -6%. So it's it's a losing month. It's a losing month for many years. And if it hadn't been for the skewed kind of like 2013 outperformer, over 200%, which basically did the most of the job, the most of the work. Anything else was most of the time declining, right? So 7 losses, 4 gains. However, one of the gain from 2013 just makes it all positive, right? However, if we exclude it, like I said, and make it go back, as early as, excuse me, 2014, right? Then what we get is a constant losing month. And we got average return, which is negative, medium return, which is negative, and annualized return, which is negative. So that's not something that you want to trade against. However, us looking at this fundamental twist, like I said, the odds, the market was going down, until this financial system kind of like started crumbling. So this happens. That, like I said, those unpredictable events just come up with different resolutions, come up with different relationships, changes, and different plot twists, immediately. And there was like this immediate snap that Bitcoin did go to the upside and broke with its very, very, very powerful injection of power and strength and technical momentum, empowered by the financial system collapse. Yeah. So those things happen, right? And in all honesty, I'm really good with that. I'm really happy for it. I mean, I'm happy in terms of my financial outcome for the trades, that I would take publicly. So even though the March is not a bullish month on the calendar, there's not much you can argue there. I mean, it's very apparent that it's just red, right? The bullish inverted black swans, if you will, may happen at times. Oops. And it may work in our favor, right? The thing is that if the odds are really working against you, if the odds are the red, right, then betting against those red odds may cost you a lot most of the time. However, once in a while, those winning trades would also come. Those winning months would also come, right? And guess what? It's even better, right? It is technical analysis, including the seasonal patterns and the technical studies, just is a tool to manage risk, to help you manage the risk, so that you know that if the conditions are terrible, such as the month of September, for instance, which is the only losing month on the historical average since ages, then maybe it would be not necessarily logical to overexpose yourself to investments in crypto in September, right? Maybe just consider it a little bit more, backed off, withdrawn approach, a little bit more reserved, right? And if you head into bullish pattern of April through May, which is called, sell and may go away, the sweet spot of the pre-election year, which basically gives you the biggest return out of the entire pre-election year, right? This is what makes the time from April to May is what makes the biggest amount of money to traders in the pre-election years. Historically, this is so-called sweet spot. And this pattern of sell and may go away means that you do not basically want to get stuck in this thinking. Excuse me so much. Sorry. In this thinking of like I said, this bullishness which has developed and which typically in history develops very very well in April and May, for the entirety of the financial markets and the seasonal patterns that just work over the hundreds of years and so on. That's not something you can argue. It's not just a kind of like a one trick pony that is just taken out of nowhere and out of the 5 days data. In fact, we're talking about data as big as 70 years. Let's say the January barometer, 72 years ever since 1950, basically brings 83.3% accuracy ratio, that as January goes, so goes the year. And guess what? We closed January very positively, right? So we have 83.3% of chances historically, because those historical frequencies correspond with the probabilistic aspect to it, right? So it translates to probability. So 83% of chances that you're going to be right about betting that if the January was bullish, then the entire year is bullish again, right? And then on top of that, we have this overlay of the bullish pre-election year in history, 83 to 84 odds, which is telling you that the market is going to go up this year, right? On average, 20-30%. The strongest seasonal pattern is in the pre-election years, which are followed, or which I should say, preceded by the midterm bear market, which is exactly what we had last year. So the bear market gives you this rump, this trampoline to bounce off, right, and heavily recover to the upside. Now, with a very strong and aggressive pullback to the upside recovery, the strong rallies, and the start of the new bull markets, right? This is 2019 all over again. With this difference that it's a little bit more bullish, right? So, long story short, if we go and continue, excuse me, then please bear with me. Then sell and may go away pattern basically has earned, if you kept buying in April and selling in May, at the end of May, you would have made 800, almost 820 annualized return, right? With average return 44%, almost 45% on average year after year. An annualized return, compounded return, basically almost 820%, right? If you kept doing that year over year over year, right? Reinvesting, capitalizing on that. 75% of winning trades. Again, that's a strong probabilistic aspect. It's not 50-50. It's not a coin flip. It's not a coin toss. It's 75%. Those are pretty good odds, right? And we're talking about 12 years of data, which is considerably okay for Bitcoin. 9 gains, 3 losses. Okay. So heavily skewed also, because of the 2011, excuse me, 2011 rally. Oh, geez, I really need to shut up soon. And even if we exclude the biggest outlier, if we go back as early as 2012, right, and have 11 years of data, then even if we exclude the most bullish year, that just basically this 10x, that Bitcoin 10x in April and May in 2011, then you still have very strong seasonal pattern of 72%, almost 73% winning odds, 8 gains and 3 losses, average return 20%, median return 28%, closer to 30, annualized return compounded over 200%. So it tells me that, see, this is a very strong seasonal pattern for sell and May go away, buy in April and sell in May, right? Typically, because otherwise, on average, the market goes down and, on the trend, the data just goes down throughout the vacation time, right? And bottoms out and dips. Like I said, the only losing month is September on the record for Bitcoin, right? Which is where we kind of like often have those terrible conditions, and people would go into disbelief and so on and so forth. This is what happened in 2019 every single time. Regardless, I'm just telling you how it is right now. It does seem that from the technical standpoint, we're looking at strong seasonal patterns, strong odds that the market is going to come up even stronger in April, in May, right? As March is not bullish historically on the record, and we got this gift from the market, gift from the God, if you will, this present, that is our duty to kindly accept it, right? We can only do something as simple as accept it. I do accept this bullish turnover in March, right? However, we're midway through. So I'm just saying that whatever happens, this Bitcoin has got a lot of injection in terms of the fundamental reasoning for why the market would go up for Bitcoin, right? As it was reacting positively against and it's people are hedging, against what they know. That's where the narrative of the Bitcoin working as a hedge against the banking collapse, this is where it's coming real. However, it's not going to last forever, most likely. Kind of like changes, it just fluctuates. Once in a while detaches, one at times it's correlated, it's stronger, at times it's decorrelated, and so on and so forth, right? So all that I'm saying is that hang on, that's not the chart. We are really breaking above critical resistance. Right? Just have a look. We already broke. We already broke out. This is a very, very, very important breakout. Very important breakout on the weekly chart. This is long-term chart, right? Very important breakout. So close the week outside $26,000. And in my opinion, it's game over for the bears, right? I mean, there's not going to be much of bearish reasons anymore, I would say, right? I mean, this 50-week average and this kind of like a $25,000 resistance was like the last thing that the bears had to say about that, right? Anything else is basically like a free path, cleared path for something that may turn eventually into new all-time highs, right? This is what Bitcoin does. So, like I said, having look at this positive bounce, with a little bit of volatility bouncing off the 200-day moving average, it's cool, it's good. I load it. If you followed, you loaded it as well. Congratulations. And it's accelerating. This is a very, very strong vertical sharp movement, right? And your job is not to counter trade, not to trade position in opposed manner to such powerful vertical rallies. I often make this parallel and compare that to like a speeding truck or a rocket, and there is just you trying to kind of like stop it with your body weight, with your portfolio, whatever that is. It can be even $100 million. Eventually, it's going to blow you off. It's going to blow you up, right? It's going to blow it up because your body weight is not going to stop the spinning truck. Your body weight is not going to stop the impetus of a rocket flying, if you know what I mean, right? So same thing is just this moving money in this direction. This impetus of the market is what we call momentum, right? And momentum is what drives the trends, and those trends are often driven by those, like I say, psychological errors, those behavioral biases, emotional, cognitive, this recency bias, hindsight bias, overconfidence, so many different reasons that are trend promoting that would promote the trends, that everything was predictable. Of course, nothing is predictable. However, technical analysis is not supposed to tell us the future. It's supposed to help us when we should reduce the risk. That's what it does, right? And it's telling me that there is no reason to reduce the risk. And in fact, there is more reason to be bullish about April and May for the next couple of weeks, right? So that's what I will do. Heading into bullish with this bullish record, heading into even more bullish record, of April and May. This should make you a little bit more optimistic. And speaking and responding about it, about the merit. The main resistance for Bitcoin is $30,000 right now. $20,000 was this nice support. And I mentioned that many times. We as people, we as traders, love those easy solutions, this path of least resistance. We love and have this natural prejudice against difficult numbers. So our mind would make it better if we remember simple numbers. So round numbers, those easy to memorize, easy to remember, like $10,000, $20,000, 30, 40, 50, 100, whatever. It's going to be way easier for you to memorize and to remember than, let's say, $30,157.67, right? I mean, I already forgot what I said. I'm just saying that those round numbers work as support and resistance, and prices tend to gravitate towards those numbers because we frame our minds, we anchor our minds at these levels, right? Even if it's subconscious, our mind is going to make it work, that we're going to expect we're going to expect those numbers to come up and fulfill. And that's what makes it happen. This is self-fulfilling, however it works. So $30,000 seems to be the strong next core, which is why I would say that that might be the next stop as we go higher, right? There might be, of course, a little bit of turbulence, on side. Like I said, March is a bearish month on average, so we're midway through. It's bullish so far. However, I would recommend, so that you not lose the sight, so that you do not lose the sight, lose sight, and forget about the overall bearishness of the March on the record, right? So whatever happens, we're heading into more bullish April and May season. So arguably, we may see those $30,000 levels getting breached eventually when we have and when we encounter this bullishness for April and May, which are the sweet spot of the pre-election years, getting the biggest chunk of returns for the entire year. Hope it makes sense to everybody. Yeah, please let me know if you have any questions. Yeah, I mean it really sucks, for my cough. I'm feeling terrible for making you listen to this. I wish there was a way to kind of like cut it out and crop it out and edit it, in real time. Maybe ChatGPT, AI, whatever is going to make it possible. However, even though I'm still kind of like recovering from all the stuff, I really wanted to keep you updated, guys. So I hope you appreciate it. And if you do, make sure you smash the likes, right? I do remember that. Very good, very good call to action from Constantly. Smash the like button. I appreciate it and I fully back it. Lorenzo, thanks. Remember for likes, I appreciate it as well. Nelson is coming from Chicago. That's pretty awesome. Nelson, love Chicago. Living Sacrifice. God bless you, my brother. Howdy from Zurich. Beautiful city. And before I close off this one, right? Eventually, I don't want my throat to just die like crazy. There's one thing I wanted to share, right? Because we have recently launched our amazing premium trading bundle setup. We have released it. We have really opened it to the public, and basically, well, seeing people like Zan, from our Discord, from our membership, premium members, basically 4x quadruple profits, through the bear market for the last year, which is what he did. This is what he says in this beautiful story of his, this success story. Going 4x profits and basically winning back all the losses and just quadrupling profits, going 4x in the bear market when the market is crumbling, when everything is going down. This is spectacular. So congratulations, Zan. You did a really great job. I remember you're being very active in the Burbness in the community. So well done to you, mate. I mean, this is amazing. This is really what we all do, right? This is all to say that if you guys want to do the same, if you really want to do the same, if you feel that you're lacking some professional guidance, that you could have some professional guidance to help you stand back on your feet, feel free to use our opportunities, because right now we have a discounted access. It's actually in my pinned tweet, so feel free to go ahead and head there, because for limited time, there is only a couple of more days left. If you sign up for the Burbness exclusive Nest Club membership with special discounts, 20% off, with 10% off of every cryptocurrency order, right? All together combined, like a combo of 50% off you can get for a yearly membership program. You can get a free hoodie. You can pick your free hoodie, and only 100 hoodies will be produced. So this is literally you getting the chance to be one of the 100 people in the entire world getting hoodie of your preferred pattern. And there is this never lose guarantee, 110% never lose guarantee, which basically tells you that if you follow the program for 14 days straight and you get no successful call from me or from my team, no successful profitable suggestion, or you see no value, I'm going to pay you back $100. So you have this money back guarantee to it, right? Or you can pick it, even more valuable for a strategy session that is basically worth all the 371 bucks. To figure out what's wrong, right? So the full rules to this 110% of rules guarantee so can be found on the website, and it's basically as cheap as $6 a day, right? So for $6 a day, you can fulfill what Warren Buffett says, that the best investment you can make is investment in yourself, and the more you learn, the more you will learn. I think I'm the best example of that, right? I mean, earning 400K in just a matter of a couple of weeks ever since the year started was possible because I did commit to my learning. I did commit to the CMT path, or to understand charter market technician approach, and myself being the only charter market technician, I'll take pride in guiding you there. And you get a special hoodie, right? So all you have to do is just apply your special coupon code at the checkout with hoodie20. That's the coupon code, hoodie20. Go ahead, take it, put it in the checkout, and you're not only going to reduce the prices of the membership that you're going to get, you're also going to get 10% off if you pay with cryptocurrencies. You're also going to pick your own one of 100 hoodies ever produced. One of 100, only 100 hoodies, only 100. Now there are actually more left, less left than 100. You can pick your favorite hoodie, you can pick your favorite pattern, belief, the burb nest, whichever you want. You can pick it. You can just drop the suggestion, your size, your different dimensions to get it crafted specially for you and delivered right in front of your doors, so they can be and promote the Bitcoin. They can be promote the financial freedom that they're going to gain in the burb nest. So if you want to be like Zan, if you want to really commit and learn how to stop getting wrecked, how to really financially get improve your trading, stop losing. I've been there, I've done that. It sucks, losing sucks. We can make it happen for you. We can help you get there. And if you sign up right now, if you sign up for the next couple of days before the offer expires, before we take it off the website, and before people actually just front run you and get this bundle before you, right? You can utilize the special discount hoodie 20 at the checkout. If you apply that for 4 months, or yearly membership, you're going to pick your favorite hoodie, your preferred hoodie, and it's going to come, like I said, with money back guarantee, 110% never lose guarantee. That's what it's called, money back, or free 15-minute strategy session with me and my team to figure out, what can be done. So do not miss out on this one. And as simple as that, $6 a day, one coffee a day may basically give you a lot of value. And just maybe you're going to be like Zan and quadruple your profits. And I'm really looking forward to seeing what Zan is capable of doing when he pulled off 4x, winning back all the losses and going 4x on his profits in the bear market. I'm really looking forward to what this legend is going to do in 2023, and when markets are really bullish. That's all I've got for you. Make sure you go to my pinned tweet. You're going to find me at crypto_burp. Go to my pinned tweet. I'm going to hold it for a couple more hours before I take it off. And go on, click on the link, apply the checkout code for reduced prices, pick your hoodie, and I'll see you inside. That's all, folks. God bless you all. See you around. Bye-bye.